All right, we are live in Memorex. How's everybody doing today? Wednesday? That's so funny. Someone just said nice hat, and I just got this box on my front porch, and I didn't know what it was because I don't ever remember what I ordered because things take so long to get delivered sometimes. And I just opened it up, and it's another hat,
Nice.
but this one, XRP hat. Got to represent the XRP every once in a while.
Oh yeah. But I like that crypto hat. Are we gonna get one for Hanukkah?
They are available on our store. And I am going to be sending them, I am giving them out. I do have some people on my list that I'll be sending stuff out to because they, commented and did some YouTube stuff for me. But I think what's going to be easier is I'm trying to get Chad to put together a code, a discount code, so I can just send you the code to the link to the actual store, our crypto store, Crypto Renegades store.
Okay.
Some of you may not know that that exists, but we have one.
No, that's the first I've heard about it.
Yeah, let me hold on one second here. Let me share my screen.
Yeah, I made a good scalp on H bar.
Oh, nice, good. Yeah, so if you go into the mastermind, I mean into the Discord, and you go up to um official links right here, Crypto Renegade Shop. You click on that, it'll take you here. We do have, hats, tanks, shirts, things like that. So that's that. And you can order whatever you want there. But I will be, I'm trying to come up with a coupon code so I can send to people to where they can go and pick something out or order something. And then the coupon code will change the price down to 0. That would be the free gift. But rather than me, I have to order it, have it sent to me, and then ship it to you, or, put your shipping address in. So it's a little bit of a pain in the ass for me to have to do that because I'm tied up doing a million other things. So we're trying to get it to where we can just send you a link and you can go and order stuff yourself. That's coming. We're working on it. Just keep forgetting until someone asks or mentions it. All right, what was going on here? Give me 1 second. All right, so Bitcoin. Let's just talk about Bitcoin for a second here, because Bitcoin has been in this overall downward trending channel from the top since October, right here, all-time high of Bitcoin right there. Just put this line back over here. Let's change that to red or something so we can see it. That's the all-time high. And then we've been kind of trending downward ever since. And what did we just touch here? Boom, right there, we hit this. Not only the bottom of the downward trending channel, we hit it here, we whipped down to it here, and then we came and hit it here. Boom, and then boom. And we wicked right through it to this little line right here, this level. What is that level? That's the 80K line, but it also is exactly the bottom of the upward trending channel, this one right here. Let me change the color of that so you can see it. Let's make that orange. That orange line, at the exact same time, we are hitting this downward trending support, wicking through and hitting that orange line right at the 80K and bouncing. Let me zoom out so you can see what that orange line is. That orange line is the overall upward trending support going all the way back to the bear market bottom. And that's what we just hit. Boom. Now, normally when we hit it, and the last couple of times we hit it, we went up higher. We hit it, we went up a little higher. This time we came back below it. We wicked up to it, touched it right there. I don't have this adjusted probably, but then we got above it and we're holding support. We come up and then we come back down and hit it again. These are not considered double bottoms because they're basically hitting it. And they're retesting previous resistance when they hit it. So let me just show you what I mean. Comes up, hits it. Previous resistance. Right? This one came down and double bottomed before climbing back up. And then this one right here, we go up, we come down and hit it. Previous resistance. Retesting. This one comes all the way up to 73.8, 74K, comes all the way down and hits it. Previous resistance. Before climbing out, but it hit it again here. So even though this is upward trending, it wicked through it, hit previous resistance, bounced on it again before climbing out. Here, very similarly, we hit it, but are we going to just climb out? Let me get rid of all these other lines so you can see it clearly. We hit it, boom, and we bounced, and it is a lower high still. We did not break out of this yet, and we come down, but we did not come all the way down and hit that line again. But maybe this is the double, maybe this is the retest. I mean, it is double bottoming here, but these wicks went down further, and now we're climbing back up, and we wick all the way up to the top of this line. I mean, this downward trending resistance. So to me, we're still in the downward trend until we break out of this, which needs to happen here. We need to break out, hold the support, and that would be a trend reversal. It would look like I mean, we were in a little bit of a channel right here on the way up, and we broke out to the downside. If I really zoom in, you can see channel broke out to the downside and retested the bottom of that channel. We're retesting it right now. We're also retesting it while we're coming up to this downward trending resistance. So what has to happen is we need to break this to the upside, hold the support up here, and then what will happen probably is we'll just go back into this channel. It might get wider or fatter. It might break out differently, but generally speaking, whenever there's a big break out of a channel like this, sometimes it comes right back up into the channel. But the problem with this channel is that as it's coming back up to it, it's also hitting major resistance. Now, if we go to a lower time frame, it looks like a big cup and handle. And it could very well be one. Same with XRP, and that's why I went long, because this looks like a nice cup. The problem with the cup here is that it's up against resistance. A lot of times, whenever a cup is up against resistance, not only the resistance of this channel that it was in, but pretty much doesn't have far to go before hitting this resistance, and it looks like it's banging on this resistance right here. The handle, this could be the handle up here. This might not be it right here, but this could have been the handle, and we could have had a breakout, but the breakout didn't make it all the way up. Let's just say where it should go is break through the downward trending resistance and be back into this channel, probably like that. And then what happens? It hits that, retests the downward trending previous resistance as support, bounces. And now we're in this channel, which is a trend reversal, no longer in the downward trending channel. We've broken out. This little dip down and back up was just a temporary, I think it might have been Trump basically clearing their airspace in Venezuela, getting ready to bomb Venezuela. Drug lords on their territory. Russia is evacuating Russians. There is shit going on in the world that causes this stuff to happen. that most people are not even aware of. And so people get fearful and markets tank, markets do different things. Trump makes an announcement, this happens. It's usually temporary, but when it comes back, it usually comes back into the same channel that it was in. The problem with this one is it's right up against resistance. So here's the two things that can happen. This is either going to be a cup and handle, it's going to break through this resistance, and it's going to be finally the breakout that we've been waiting for after the retest of this downward trending or this upward trending support down here. Or it's not done yet, going down. And then this would happen instead, where it hits this, which it just did, right? Maybe it'll come back up and hit this, and then it'll come back down again for a double bottom of this channel, which usually happens before breaking out. Then what's the other option? The other option is it does that and comes down, retest this, and instead of breaking to the upside, it breaks to the downside. Then we're in the 70s. And right here, this red line right here, guys, is the magic number, the 74.5. The previous, let me just go back and show you what that red line is. That's this red line right here is the previous support, 74.5, and the previous resistance at 73.8 right here. Basically, that was when we broke the previous all-time high of 2021. We came up and hit that line right there. We hit it again right here, boom, and then we broke through and we went up to 108, 109, and then had a falling wedge and retested it right here, boom, before breaking out. So we might need to retest that one more time. But I will tell you this, we need to hold above this in order to stay in a bull market. If we break below this, in my opinion, this is not everyone's opinion. Even Chad may differ in opinion from me, but on some things, but in my opinion, if we break below the 74K and we actually, my number is actually 70, but I would say that it's more of a zone. It's more of a price range between, I have that line right here, this yellow line. So it's a price range between actually $70,000 and that 74.5, that red line. So let me just bring that over. That's a zone. If we get below this zone, then whoops, I didn't mean to do that. My thesis will be that it's gonna be a big dump down further. So we are right on the cusp, guys. We're right on the actual determining lines right here. And so far, throughout this whole bull market cycle, we pretty much bounced and stayed above this line and made higher highs and higher highs. But let's go look at something very important, something I very rarely show you guys because it's usually not needed to see until we have these bigger. Hold on one second. I gotta close that out. Open this other chart, this other screen.
Hey, Nico, if it gets into the 70s, isn't Bitcoin in a position to be delisted?
No, not Bitcoin. Michael Saylor. Michael Saylor's company might get delisted from the stock market, MicroStrategies, because he's leveraged on Bitcoin, but Bitcoin's not going to get delisted from anything.
Okay.
Is that what you're referring to?
Yeah. I saw what was being posted, and I was a little confused about that.
Yeah, no, Bitcoin is Bitcoin. Bitcoin can go down to $20,000, $30,000 and bounce and go all the way back up to 500K after that. Bitcoin is the leader of the pack. Bitcoin is the only crypto that is not an altcoin. Everything else besides Bitcoin is considered an altcoin. Bitcoin is decentralized. It cannot be delisted. It's not on it's on centralized platforms like Coinbase, but it is a decentralized crypto, and it's not controlled by anybody. That's why it's taken so long to get regulated, because governments can't really regulate it. You could have bought $1,000 worth of Bitcoin 10 years ago and have $1 billion worth of Bitcoin sitting in a cold storage wallet and no one in the world knows. I mean, they might know that there's a wallet with $1 billion in it, but they wouldn't know it's yours. But yeah, and no one could take it from you. And not only that, but Bitcoin is probably the only crypto in the world that you can take with you. It's probably the only asset in the world that you could take with you when you die. And what I mean by that is that, you know, if you have real estate or a house full of furniture or bank accounts, when you die, someone else is going to get all that stuff. Someone's going to come liquidate they're going to have an estate sale. They're going to sell your cars. They're going to, you know, the banks will repo whatever you owe on, or they'll sell it. They'll liquidate it. Your family will come and take all of your belongings, you know, things like that. Everything will go to somebody. But if you have a crypto wallet where you are the only one that knows the password and the passphrases and the 12-word seed phrase, and you didn't tell anybody, then no one will ever get that. You're taking it with you, basically. It'll just be one of those crypto accounts that no one can get into and no one will ever have access to. So interesting. That's an interesting thing about crypto. But anyway, I got off track a little bit. What I was going to show you is the 2-month time frame, the 2-month chart, which we never talk about really. Let's go look at that. Let's go to the monthly down here. 2 months. Oh. All right, let's look at the stochastic RSI on the 2-month time frame down here. This is undisputable, so I don't care what anybody says. This is just the way it is. Look at the stochastic RSI down here on the 2-month time frame. So it goes back all the way to, you know, 2012 back here where it's been keeping track. Whenever we are up here in the 100 zone, up here. In fact, I'm going to put a line so you can see at 100 right there. And I'm going to make that a little smaller. And I'm going to bring it down a little bit to 98, 99. All right, so whenever we are above this red line, it's the top. That's at the 100 zone. You can see that, and then we look at the price. Look at the price of Bitcoin. As soon as we got to the top right here, it pumped up, 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 up. And over here, it just stayed flat. The blue line and the red line just going sideways, but it stayed above that red line, above, right around at the 100 mark. Okay. And then we drop all the way down below the 20. Now, see these dotted lines here? This is the 80, that's the 20. The reason for them is because when we're below the 20, we are oversold. When we're above the 20 or the 80, we are overbought. Okay, so just look it down here. Look where we were when the blue line crossed the orange line to the upside, we pumped up, and that was a huge ballistic parabolic move to the upside. And then we get back up here. So look at right here. I'm going to hold my mouse there. Look at the dotted line up above. And I just go sideways, 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 sideways. As long as we stayed above that line, that 100 on the RSI, stochastic RSI, the price went up, 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 up. And as soon as it turned red, by the way, that was the top of the bull market. Top of the bull market. Top of the bull market. Look at the dotted line going down. Every time we stayed above the dotted line or the 100, as soon as we crossed below that, that was the beginning of the bear market. We drop all the way down. We get below here. Whenever we're below here and the blue line crosses the orange line to the upside, that's generally the beginning of the bull market. So this was 15,500 right here when we were at the bear market bottom of Bitcoin in 2021. Look at the dotted line going straight down. It's down in the dumps. So, and then as soon as the blue line crossed the orange line to the upside right here, boom, that was the beginning of the bull market. Same with here, same with here. So where are we right now? We got all the way up above that red line. You see the blue line, it got above it for a split second right there. And let's just look at where was the price when that happened. Let me get rid of some of this other stuff up here so you can see it. Let me just clear these things out. So right here, we got above it. And that was right at the 73.5. That's when we came up and hit 73.8, 74.5, the all-time high. We just broke the previous all-time high from the last bull market right here. Boom. And that is when we just dipped our toe above the 100 right there with the blue line. But the orange line did not get up that high. Whereas here it did, here it did. They both were up above 100, but here only the blue line got above it. And then we consolidated down for like 280 days. And we climbed back up and we hit a new all-time high right here at 108 and then 109. But look, both the blue line and the orange line were not above the 100. If I'm able to, if I can't draw this back here without the rest of the lines popping up. So let me just get rid of all these lines. So when we were above the 100 right here, we got above it here and we touched it right here. This little point right here, this most recent one is the 106. That's when we were up here at the all-time high of 106K. 126 rather, I'm sorry, 126. But the orange line never got above it. So, and now what's happening? The blue line has dropped drastically through the orange line, which is usually not a good sign, but we really have 28 days. Like I said, guys, it's the monthly. You remember the monthly time frame I told you, the end of the month. So a lot of you are going to be out partying on January 1st, New Year's Eve, or December 31st, New Year's Eve. You're going to be partying, right? Some of you. And I would suggest that maybe you don't. And here's why. On that day, when this counts down to zero, 28 days and 7 hours left. When we count down to zero and it's New Year's Eve and we're about ready to flip the switch to January 1st, if this line, this blue line is below the 80, and I would say below 79, let's just say, right here. Then that would mean that this point right here was the top. 126. And only because historically that's what it's always meant. Now, could this time be different? Yes, I always say that, guys, on these calls. This time could be different, and we could have a pair of. Now, there is a way to avoid this. This blue line could bounce, and it could come back up like it did here. It came down, it crossed the orange line here, came down, and then popped back above it and made another run for it. But it didn't. At 126, it didn't get any higher. The orange line didn't even follow it. The orange line was tilting down, and then this comes down and crosses the orange line again. So it could do one of these where it pops back up above the orange line, and when we do have another pump to the upside, one more push, because that's what happened here. One more push. But if it's below that, guys, then we could see some. It could just mean. And by the way, when this happened here. When this happened here, when we were above it and we crossed down below, that was in June, July, August, September, October, November, going into December, boom, big pump to the upside, November going into December. So this is when it needs to happen. We're just now going into December. All of these huge pumps to the upside. Look at this one. November, right here. November, right there. Boom, December. November, December. That was the top 68K. Went down. So this happens at this time of the bull market. The last month, November going into December, is usually when there's a big push to the upside. And so that can still happen. But this is unusual. You can see every other bull market, we got above the 100 and right at the 100, and we stayed there for a little while it was pushing up. This time we went above it a minute, and then we come down and we went above it 1 second again over here, and then started to drop. So I would be watching the stochastic RSI on the 2 month. When this gets down to zero, 0 days left, and see where this blue line is. Now, it is very possible that between now and then we bounce on the EMA ribbon here and we climb up to a new all-time high, and this would look like this. This will be great if this happens. This would just be pumping, pumping, pumping back up. Maybe even get above this for a minute. And then we finally have this. Then we go into a bear market, and this would go boom, 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 maybe up a little higher, a new all-time high up here somewhere, and then we would go into a bear market. But if we don't, and this drops below here, and the orange line comes down, and these are getting farther apart, they're not even close to each other. That's important. Remember, see the distance between this blue line and the orange line? If they're far apart from each other and they're both falling like this, then chances are this was the top. Chances are this was the top. But we won't know until the end of the year about that. And a lot can happen between now and then. And that usually is when a lot happens. This is the only anomaly that we dropped off this ledge, but we did have a huge pump to the upside all the way up to $261, but that was in March. So we did drop off the ledge here. And then we had that one more pump right here and made another higher high into December before finally dropping into a bear market. So this is just my TA, my technical analysis of the grand scheme of things, guys, is that this is history repeating itself, it looks like. And it's possible that if this, at the end of this month, this is below this line, because as you can see here, I'm on the 2-month time frame, so there's 28 days left. And yeah, so this is how we kind of gauge what we think is going to happen. We don't know. We don't have a crystal ball. Anything could happen. Something strange could happen in the market where, you know, XRP decouples and shoots to the moon, or all altcoins decouple, you know, no longer correlate with Bitcoin and shoot up, and Bitcoin stagnates or goes into what's, you know, basically loses its dominance. That's known as altcoin season. It doesn't have to happen. Doesn't mean that we're always going to be an altcoin season, but that's usually how it goes. And as soon as the Bitcoin bull market cycle is over, sometimes we have some pumps with some other coins before they go into their little bear market. And it doesn't even mean that there is going to be any more bull market and bear market cycles, because that can and will eventually change. But I can only go by what history is showing me. History is every time we've been up here and fell below here, it was the end of here. It was the end of the bull market. So that's the only thing that's showing me, really. It doesn't mean that this can't be different. So I just want to be clear. Yeah, go ahead.
Hey, Nico, what's the difference between that blue line and that orange line? I mean, what do they, besides, you know, as you show, crossings signify certain things, but what's the difference between those two indicator?
Yeah. Anybody want to answer that? Bill, you want? Bill's my expert.
It's the difference between the two moving averages, basically. But I just put the what do you call it? The Discord link in the Zoom chat that breaks it down for you. It's I can read it here. It says stochastic displays two lines, the %K, which is the blue line, and the %D, which is the orange line. These two lines are shown on a scale of 1 to 100, with key trigger levels shown at 20 and 80. These lines are represented by a blue and orange line. Any action outside of these lines is considered to be particularly significant. The %K line compares the lowest low and the highest high of a given period to define a price range, then displays the last closing price as a percentage of this range. The %D line is a moving average of %K. So like I said, in a nutshell, it's basically moving averages. But there's the full breakdown for you guys.
Yeah, so we have relative strength index, we have relative strength, and we got stochastic oscillator. And so basically, like what he just said, is that they're basically both indicating potential price reversals is what's happening. And so the blue line is the leading line. It's the leading line, and the orange line is the lagging. So it's the blue line is the one that crosses over the orange line, not the other way around. when the orange line crosses back or over the blue line, it's just the blue line crossing back above the orange line. It may look like the orange line crossing, but it's the blue line either going down over the orange line or going up over the orange line. And all you really need to know is that it's a cross. Okay, so we got a stochastic RSI cross, and if it's crossing up on the top of the RSI, then that's overbought territory, and we're probably going down. If it's crossing down below the RSI, then it's bearish. It's oversold territory, and we're probably going up. So, hold on a second. Let me go back here.
I think we get caught up in the details. You don't always need to know how the roots work to eat the fruit. You know what I mean?
Well, yeah, and I've been on calls. I was on calls today with some people, some students, some new students that are brand new to crypto. They don't really know anything. They want to set up their accounts, and they're very worried about taxes. And I always say to everybody, guys, don't trip over dollars to save pennies, or don't trip over penny. I don't know. I can't remember how it goes, but the point is a lot of people worry about things they don't need to be worried about right now. Let's have a taxable event first. Let's make some money first. Just like business, if you start a business, most people spend days, weeks, or months trying to design their logo, their business cards, their image, getting hats and shirts with their name on it before they go out and make $1. How about you go sell your product or service first? Prove that it works. Make money first, then go worry about all that other stuff. So a lot of people just get things backwards. No, it's overthinking, like Bill just said. Don't overthink things too much. Let's prove it first. Let's make money first. And then when you have an actual taxable event that actually matters, and then you got to start looking into accountants and CPAs and making sure you're structured properly and most accountants and CPAs, by the way, guys, can go back to last year and fix your mistakes before you even file for that year. So anyway, don't worry about that. But anyway, so
Hey, Nick.
Yeah, go ahead.
Hey, Nico. For some reason, on your stochastic RSI, where it's the flow is smooth, mine almost looks like a Picasso. It's just everything is real edgy. Is there a setting that I'm
like this?
No, it's stretched out further, like you had it, but everything's like real kind of blocked.
Do you have log on?
On the curves, it's not smooth. It's more
let me see,
more pointed.
Go to indicate. Are you on TradingView or on Phemex?
TradingView.
You type in RSI.
Uh-huh.
And it's the stochastic RSI.
Yeah, that's the one I've got chosen, but it's not smooth like yours for some reason. It's just more blocky. I was trying to go through some of the settings to see maybe I had something picked. I'll mess with it a little bit. I was just curious.
Yeah, I'm not sure. I mean, I'm using the default settings here. Stochastic RSI 331414. You can look on yours and see if that's the same.
Nope, that's probably it.
Go into.
I don't know how it got.
You click on settings here, and you can change that right here. Inputs 331414.
You can also select default.
Select defaults, yeah, down here.
Okay, thank you so much.
Yes, sir. And then that's the stochastic RSI. Now let's look at the regular RSI here, guys, because this is, if we look at the weekly stochastic RSI, it's doing some things that are not very bullish also. I mean, it may be a little bullish in the short term here, but we also have what's called bearish divergence, where we have upward trending price movement. We have a high, a higher high, a higher high, higher high, higher high. Down here, we have a high, lower high, lower high, lower high. So every time we hit a higher high up here, you can look at the dotted line going down, we had a lower high on the RSI. That's only happened a couple times in the history of Bitcoin. And here's another example right here. Lower highs, higher highs. First high right here, 42K. Then we went up to 65, and then we went up to 68. But here we had high, lower high, lower high, lower high, all the way down to the bear market bottom. And this is what we broke out and retested, and that was the beginning of the bull market. Here, very similarly, and this is the floor down here. And let me just, we actually went below it, which is not good. We bounced on it. Bounce, bounce, bounce. As you can see here, the only time we ever went below it was the bear market. The only time we went below it was this was the beginning of the bull market, actually, in this cycle back here in 2019. And we had some big drop off from 10,000 all the way back down to 35, but we went below it. But then we immediately climbed out and went to new all-time highs. And then here we went all the way down. Right here is kind of like what we look like right now. We're here bouncing. I mean, we went through it and it's trying to come back up. And we could see a rally here. We could see a pump back up, which would look like this over here, us coming back up, holding support, and then hitting this line one more time, like this. Coming back up and hitting that line one more time. And as you can see up here, when we did that, it pumped up, but we did not make a higher high. It was a lower high. This was a big head and shoulders, and it was the beginning of the bear market. So right here, where we're at right now, is high, high, higher high, higher high, lower highs. We're back below this right now. We dropped all the way down to 80K, 80,500. We are trying to get back up, but we're below the we're below the EMA ribbons, which is pretty bearish, generally speaking. When we get below that, it's once we flip the EMA ribbon to bearish, it's usually bear market. Sorry, that's just the way it is, guys. It's not me. I don't make up the rules. That's just usually what happens. And so we are below it right now, and it is on its way back up to it. But is it just going to retest like this and then fall? Is it just going to retest like this and then fall? Is it just going to retest like this? Boom, and then fall, or like this. This one right here went through it and retested right here and then fell. So all I can do is look at history and show you every time that this has happened, this is what happens. All I really can do. There have been times like this where it fell through and then came right back up. This was the last bull market. We dropped 56% from the top of 65K. Dropped all the way down to 29 and then pumped back out, held support, hit a new high, and then finally went into a bear market. But as you can see here, it's a little different. We wicked to the bottom of the EMA ribbon. We stayed inside of it. We wicked below it for a second and climbed out. Here we actually had open candles on the weekly time frame, weekly candles below it. And we are coming back up to retest it. And notice also this dip in the EMA. Getting tighter there. That happens when we start to come back up to it. You see how it's tightening up? We're starting to come back up to it, and we could wick up and hit the top of it. If we get back up here and hit the top of it, that's going to bring us back up to 100K. I don't know if you guys remember, but I said that we're in this range here. We need to get above 100K. That would bring us right back up into this zone. If we got back above 100K, then we probably will see a new high. But if we stay below it, between the 75 and the 100, then we're in this range, really between 80 and 100, but we're in the sideways range right now. We're ranging, as they say. But if we drop below this 80 into the 70s, then we probably will see 74.5. Probably will see these numbers over here. And if we break below that, then to me, it's just bear market is all it is. There's nothing you can do about it. It's just the way it is. That's just that time of year. And we got the rest of this month for that to happen because, as I was saying a minute ago, December 31st, New Year's Eve, going into January 1st, if we're below on the RSI at a certain point, then it's probably the beginning of the bear market. I mean, that would just mean that the 126 was the top. Now, I don't want to believe that yet. We still have hope because we're above the 80 right now, and we could certainly bounce. We're above 90. We're at 92. We can certainly bounce and make a new all-time high. And it looks like it's trying to right now. You can see, look at this down here. We are below this line. That was the floor. Generally speaking, that's not good, getting below the floor. If we go back throughout history, and look at every time we dip below that, and you just look at the price, it was usually bear market. Look at this right here. Bull market top, trying to come back up, can't make it. Boom, falls below the line down here. And that's the beginning of the bear market. All the way down, comes back above the line. Right here, it's the beginning of the bull market. We pump all the way up. Next bull market top. And look at this. We come back down, and right here, bear market, we fall below that line.
Nico?
Yes.
Okay, trying to put several things together. You cautioned us about New Year's Eve parties, but coupling that with, I've been through several bear markets, and as a hodler, you just hang on and wait for it to come back up. And I see, being a new renegade here the last 3 months, I see this as an opportunity, if it does go into a bear market, to start doing some shorts. But is there something else that you're concerned about New Year's Eve?
I mean, if we have a super cycle or something that hasn't happened before, and this time is different, and we have parabolic moves to the upside, and we break a new all-time high by the end of this year, then we could be looking at the end of these kinds of cycles, and we'd be talking about something else. But on the 12-month time frame, remember I said this candle is normally green. Normally the last green candle of the bull market, and every bull market top candle was green when it closed. This one, 2013. This one, 2017. This one, 2021. And this is the one we're in right now. And it just happens to be red at the moment, but it certainly could flip back to green. It needs to get above this line right here, which is about 94K. As soon as it breaks above 94K, it's going to turn green again. So I don't know if I'm answering your question right, but the other thing to be concerned with is that if we are above a certain amount at the end of the year, then bull market is still on, and we could still see higher highs, and we could go into January, February, March still making higher highs. I'm just saying that historically, that has never happened. Historically, this candle right here was December, look at this, January 1st. The high was, I'm sorry, this candle closed on January 1st. This candle started right there. You look down below, you can see down there with the dotted line going straight down, January 1st. That's the beginning of the bear market. That was in 2022. But that doesn't mean that this is the top. This was the top. The top was 68K. By the time January 1st came, the price was down to 46K. That's how much it dropped from the top all the way down before. So that would be equivalent to us dropping all the way down to 70 on Christmas Eve, on New Year's Eve. And boom, the next candle opens and it's at 70. Well, you missed the top. You can't short the top anymore. The top was 126. If that happens, the top would have been 126. But now, if the next candle opens and it's below 70, then generally speaking, it's going to be a big red candle going down like this one, like this one, like this one. But if you look at every one of these, January 1st, January 1st, January 1st, And before January 1st is obviously December, and that's when the bull market top. It's not that that's when this is, I think, where people get confused. December 31st is not going to indicate where the top is. I mean, it is, but it's not what people think. January 1st won't be the top. So wherever the price is on January 1st, whatever the highest price was during that candle is the top. So in other words, I'll say it one more time in a different way. If January 1st comes, let's say the next 28 days clicks by, and here it is, January 1st, and the price is 94K. The current price of Bitcoin is 94K, and that next candle opens, then that means 126 was the top. If on January 1st instead, this candle goes all the way up to 150, and then the next candle opens and starts to go red, then 150 was the top. We won't really know what the top is. And by the way, it's very hard for me to say this because I'm talking about historical. The future is not historical. The future has yet to be seen. So I'm just saying up to this point, this is what's always happened. In 28 days and 7 hours, this candle will be done. It'll be printed, meaning the next candle will start. And when that candle starts, whatever the top of this candle was, whether it's 150 or 126 or whatever, it can't go lower than 126. It's already 126. That's the top so far. But it could go higher over the next 28 days. But if it opens anywhere below, I mean, if this next candle opens anywhere below 126, then 126 was the top, historically speaking. Now, is it possible for the January candle, the new candle, to start and then it go up higher than this one? It's possible. It just never has happened yet. So I have to go by, I'm a technical analysis chart trader. I'm going by history, over and over and over, these repeating patterns that happen over and over and over every cycle. And I have to go by that because what else do I have to look at? Now, if I say this time is going to be different and it's going to shoot to the moon, January, February, and March, then that's a guess. I don't have a crystal ball. That would be me just hoping that that's going to happen. I can't do that. I wouldn't do that. That would be a derelict of service. That would be medical malpractice. If a doctor just looked at you and said, I think it's this, take this drug, without a proper examination. Right? And so that would be medical malpractice. If I do it and say, yeah, I'm pretty sure this time is different, guys. I think we're going to go to 500K by the end of this year. Or in January, February, I think the cycles are over. We're not going to have any more bull market and bear markets just because I think this time is different. That would be malpractice on my part to say that. So I have to be totally transparent with you guys and say, based on history, this is what's proven to be the case every single time so far. And yes, this time could be different, but until it is different, I'm not going to assume it's going to be. I want to see it be different first. And I hope that makes sense to everybody. And I hope everybody agrees with that because that's logical, right? But I'm a logical thinker. I'm not trying to pump up anybody and with any hopium or any kind of magic wand stuff. It's like this is just what happens when you're doing technical analysis. You got to look at price action over the last 10 years, 20 years, and so far, we've had this bull and bear market, bull and bear market, bull and bear market, bull and bear market cycles. Now, this cycle has not happened yet, this bear market cycle. So is it possible this time is different and we just keep going up? Yes, I guess it's possible. Everything's possible. In fact, guys, I said this before, is if you take your clothes out of the clothes washing machine and put it in the dryer, statistically, it's possible that when they're done drying, that when you open the door, they will already be folded. It's possible, but it's like 1 in a trillion chance that they just land that way. So just because something's possible doesn't mean it's likely. Right? So
Nico.
Yes, ma'am.
I hope you had a good Thanksgiving. Can you take a look at the Gaussian channel and see where we're at there?
Oh yeah, we're way into the Gaussian channel.
Great.
Let's go down to the 5-day. Here's the Gaussian channel. We're already below it on the 5-day. This is another indicator, guys, that it's hard to dispute when you look at history. There's a lot of people that don't use any of these indicators and they just think that they're all, foo-foo, or, they're not accurate. But on certain time frames, all you got to do is go back and look throughout history. Whenever we look at this, this is the bull market, right? Here's the bear market bottom right here, 15,500. We were in the bear market. So let's reverse engineer this. We were in the bear market here all the way down to here. When did we come into the bear market? When we got below the Gaussian channel. But we flipped the EMA from bullish to bearish. We retested it, couldn't get back above it. We hit the bottom of the Gaussian channel, came up to the middle line, couldn't get back above it, and then dropped below it. As soon as we drop below it, that's the bear market, and we're below the EMA ribbon as well. As soon as we cross back above the Gaussian channel, it turns from red to green, and we bounced on it, and we are on our way. We're on the bull market. Here we are going all the way up to 2022, 2024, 2025, and here we are. We flipped the EMA ribbon once again, and we dropped down to the center line. By the way, we tested the center line several times, but we never flipped the EMA ribbon. We got through it, but came back above it. Got through it, came back above it. Bounced to the center line, got back above it. Flipping the EMA ribbon is different. Flipping bearish. So that's the last time that happened. And here we are. We got through it. We've actually opened candles underneath it, and now we're retesting the bottom of it. Let's go back. That was the last bull market. Let's go back to the one before that. We wick down to it, we bounce. We get sucked down to the center line, we bounce. We can't get out of the top. We come back below the center line, hit the bottom. We come back up and retest the center line, turns red. We get below the Gaussian channel, bear market. That was the one before that, back in 2013. Bull market top, wick down to it, touch it, bounce. Come back to the center line, bounce, can't get out. Touch the center line, bounce, can't get out. Drop below the center line, drop below the bottom, try to get back above, retest, bear market. Flip the EMA ribbon. I mean, guys, it's just, let's go back to the one before that. This is 2011. Wick down to it, bounce. Wick down to the center line, bounce. Come back below the center line, come all the way to the bottom, wick below it, climb back up to the center line. Okay, we were below it. Technically, that is a bear market. I mean, we were below the EMA ribbon here, and we dropped from $31 all the way down to $1.99. Bear market. That took a whole year, and then we finally climbed back out. So this was back when Bitcoin just started. There was no real data back then, but so far in the 3 cycles, what we call bull and bear market cycles, it's happened 3 times. And so the Gaussian channel is there for a reason. It is a actual technical indicator. It's most accurate on the 5-day. Now let's look at the 4-day. Much further below it. Let's look at the 3-day, turning red. Okay, the 3-day is turning red right here. Now it's done this before once, before bear market. You can say, well, maybe it's done it again, but that was bear market. It's done this. This was the bear market. We got out of it. It literally, for whatever reason, turned red again here before turning green. It just flashed red, and then we stayed back out of it. And that's because we came back, we came back into the Gaussian channel. But here we're way below it right now, guys. And what is the 3-day compared to the 5-day? It's kind of a forecast of what's to come. It's kind of like looking at the Weather Channel. You see the 7-day forecast says 7 days from now, we got a cold front coming in from the north. But 3 days from now, it's raining and getting cool. It's kind of like an indication of what's coming. So
Nico,
yeah.
I have one more question.
Yes.
Concerning all this. For those of us that wanted to, when you call the bull market top, to short it all year. So what would we do if we don't hit the all-time high? We would short it from where it's at.
Well, yeah, because you can't go back and short the top, right? If you didn't already get in at 126 on a short. If any of you got short on 126, and by the way, we were short at 126. We just didn't stay in it, most of us, because we thought it was going to bounce and go back up higher. But if you're still short from 126, congratulations. That was probably the best entry you could have gotten. And how do you know to do that? Well, when we're coming into the end of a bull market, right here at 123, you could have shorted. But then when it popped back up to 124.5, you would have been negative a little bit. As long as you didn't get stopped out, you could have shorted again or just stayed in your short from 123. When it comes up to 126, now you're $3,000 above your short entry. So you probably would get taken out, or you'd be scared if you don't have a stop loss that you're going really negative. Doesn't look like it on this like much, but from 123 to 126, the price would be $3,000 negative. But if you would have shorted any one of these, you'd be way in profit right now. Like huge. But here's where there's also some confusion, especially if you're trading on USDT margin, you'd be way in profit. If you're trading on a Bitcoin margin and you short this right here at 126, right at the top, you shorted it. It dropped 36% since then. So if you would have went short, let's just use a whole Bitcoin just for easy numbers. You had a one Bitcoin worth 126K and you shorted it. Now the Bitcoin down here is worth 93K. But let's say you went short with 10x leverage. Okay, so your one Bitcoin, hold on one second, let me get my calculator up here. All right. It's not letting me pull up my calculator. Oh, here we go. $126,000. You have one whole Bitcoin. Let's say you were risking a whole Bitcoin. It's just easier for the math for you to understand this, and Bitcoin drops 36% down to 90. What was the price? 80,000. Right now it's at 93, but let's say it went down to 80,000. Okay, so times 36%, you've made $45,000 more Bitcoin. But the value of Bitcoin is now $80,000. But you have 45,000 more of it. So basically you have now a Bitcoin and a half, but it's only worth $80,000 now per Bitcoin. So this is where a lot of people get hung up on shorting. They're like, yeah, but if it's going down, how are you making money? Well, the value of the asset is going down, but you're accumulating more of it on the way down if you're trading on a Bitcoin margin. So what does that mean? Let's say this was the bottom and it bounced. Okay, and now you have 126 plus 45,000 more. So you have $171,000 with a Bitcoin down here, and then it bounced and it goes back up. Let's just say all it does is go back up to 126.
What about the 10x leverage?
Yeah, I'm not even talking about leverage right now. This is so you understand. Like you seem to be like losing money on the way down or losing value on the way down, but you still accumulated more. And then it goes up, back up to just where you started. Let's just say for this example. Oops. Let's flip this around. And that's a 54% gain to the upside. How much do you have now? 171,000 times 54%. Now you've just made another $92,000 with a Bitcoin. So now you're up to so you started with one Bitcoin up here at 126,000. You shorted it and you didn't do anything. You got out right here. You got out right here and you didn't even go long. You just held until it went back up. All it did was go back up to where you shorted it, and now you have $263,000 worth of Bitcoin divided by, and the current price when it gets here is 126 still. So divided by 126,000, you have 2.09 Bitcoin. You just doubled your Bitcoin holdings. And that's without any leverage when you shorted it, but it did have to go back up for that to happen. Now, if you short,
Nico, actually, they would have had to buy to get that 54% to get to 2.09. If not, it would have been 1.36 Bitcoin.
they would have had to buy what?
Because you said going down from 126 of whole Bitcoin would be a 36% down move, basically giving you 1.36 Bitcoin after that without leverage. And if it goes back up, you still only have 1.3 Bitcoin. To get 2.9, you'd have to risk that again, going back up to get your 54% to get your 2.09.
No, you accumulate the $46,000 of Bitcoin on the way down. So you have the extra Bitcoin. It's just worth less right now. If you just sat on it and waited to go back up.
That's what I was saying. But if it just went back up, it's the value's going back up, but you're not gaining more Bitcoin.
You already gained it on the way. You gained it on the way down on the short.
Yeah, you did, but you only gained 36% of the one Bitcoin, which is you would now have 1.36 Bitcoin. So you'd have to put another Bitcoin in to go up to get the 54% to get it to 2.09. You can't not be in the trade while it goes up and gain more Bitcoin. That makes sense?
No, you're not gaining more. It's just the value is going back up to where it started. And so
okay.
I see what you're saying. Yes, I do see what you're saying. But if you just did what I said without longing this back up and it just goes back up to the price you started at, you have more Bitcoin at the same price you started with than you did by not shorting it. But you're right. I was going to get to the leverage part. You do have to if you were to enter this trade back up to the top, or let's just say this was the bear market bottom and we thought that it was, and you went long again with that same amount of Bitcoin, which, what did you say it was, William? 1.36? It was 36% down. So you would have a Bitcoin plus 36% more Bitcoin. I think it was $45,000. So you'd have 170,000 in Bitcoin. And if you did go long with that, and at 10x leverage, and it just went back up to that amount. So let's just say that $171,000 with Bitcoin times 55%. That's
you would have to close out that trade. That's what I think he's not understanding. You close out that trade, you wouldn't ride it back up on the same.
That's correct.
Short,
yeah, you would have to
close
short
out and start a new long.
Yeah, and William wasn't wrong. It's just you do have to close out the short. Yes, you can't stay in the short. But if you close out the short and you're just sitting on $171,000 of Bitcoin and the value goes back up to 126,000 per Bitcoin, then you would have more. You would have almost twice as much Bitcoin because it went down 36%, but it went back up 55%. With 10x leverage on the way back up, you're turning that into $940,000 worth of Bitcoin. Divide that by the 126,000 that Bitcoin is worth again, and you just added 7 Bitcoin to your account without having to buy anymore. That's what the leverage. But I understand what William's trying to say, and probably not wrong. I'm just I'm trying to give you the oversimplified explanation here. But
hey, Nick, I have a quick question about this. Would it make more sense to trade in a stable coin on the way down and then switch it to a Bitcoin trade tether on the way up?
In hindsight, it sounds genius, but we don't know if it's ever going to go up or down, right? So it's like people saying, hey, Nico, if this is the top, shouldn't I convert all my Bitcoin to USDT, wait for the bottom, and buy it all back at a lower price? And yeah, if in theory that sounds like a good idea, but what if it never goes down? What if it goes up after you convert it to USDT? What if Bitcoin just shoots to the moon after that? Then you're going to be really mad that you did that. So I don't, it's not that it's not a good idea. In theory, yes, it sounds like a good idea, but in practice, it's hard to know if that's actually going to happen. So what we do is instead of trying to predict the future, we try to just react to what's actually happening. And we have to determine what is actually happening by support and resistance and breaking certain, support zones and getting below certain amounts, and then time frames, time frames, candles ending on a certain time frame, and historical charting, trying to figure out, okay, but it's still nothing guaranteed. Even if you do all of this right and all the indicators right, all you're doing is increasing your chances of being right, and sometimes drastically. Like if you have an 80% chance of being right, that's pretty damn good. And so that's what you want to do. You want to reduce your risk tolerance as much as possible, but you're not going to ever eliminate it altogether because some astronomical thing could happen. I don't know if you guys remember, but a few years back we were trading and Elon Musk came and announced that he is going to accept Bitcoin for Tesla cars. And Bitcoin shot up like 20% in a day. It was ridiculous just because he said that. And then a couple of weeks later, he said, after further thought, he doesn't know if it's good for the environment, so he's not going to support Bitcoin anymore. Boom, it dropped like 40% that day. So those are things we can't control. Donald Trump says something crazy, we're going to go to war with China, boom, the markets crash. We can't know everything that's going to happen, right? So all we can do is prepare for it and use proper risk management in case something spikes against us. And a lot of times you guys see me when I'm trading, I'll give a signal. Like for instance, the most recent one. Let's say let's go to my signal channel. I went long here on XRP. Stop loss 213, take profit 238. All right, let's just go and look at that. I probably didn't even do it. Let me just go make sure I did it. But no, there's the XRP. Let's go to the lower time frame. We have a nice, what appeared to be a nice cup and handle happening right here. I gave my long right here, and I put a stop loss in the chat at 213. But it doesn't look like, let me go down and look. CoinM, I did not add it on the chart because I'm trying to protect you guys in case a catastrophic dump happens. I'm taking the risk because I'm not risking much XRP on this. I have $655, $299 XRP. So it's a low risk trade for me. But I didn't put a stop loss because my liquidation is way down here at $1.93. It would have to literally dump all the way down there for me to get liquidated. And of course, I'm watching all the time. But in a perfect world, I should have put my stop loss right here at 213 where I said to do it. So I'm going to do that right now. Just to do what I said I'm going to do. That would be a 16% loss instead of 100% loss, right? So if this dumps and hits my stop loss, it could happen like XRP could come on and announce. Guys, this is the thing, what I was just talking about, Elon Musk and Trump. Somebody could just say something that causes a huge dump in the market. And you just don't want to be caught really negative. Like that, if someone said something bad, XRP could have dumped all the way down to here. It may not go to my liquidation, but I would be very negative down here. And I would be like, that sucks. Now I got to wait for it to come back around. Whereas I could have just got taken out here with a 16% loss and waited and reevaluated the situation. So I usually tell new members, I usually tell you guys, and I normally practice what I preach, but sometimes I leave it off there because I'm not risking much or my risk tolerance might be different than yours. But when you're new, you should always abide by this rule is whenever you place a trade, you come over here, you put your contracts, you put your leverage, you put, your account size, all that stuff. If I go long here, now some people go click this button right here and they put in their stop loss and take profit target before they even enter the position. I personally don't do that. I enter the position, and as soon as I enter it, that would probably be a good idea. But what I do normally is immediately after I enter the position, I come down here and I hit TPSL and I type it in here. And you should do it relatively quickly in case there's some catastrophic announcement or something in the market that causes the thing to go the opposite direction of what you want it to do right after you entered the position. And the likelihood of that happening is slim, but it has happened. How many times have you ever entered a position and it immediately went against you? Like pretty quickly. That does happen once in a while. And you're like, what the hell? Does it know that I just made a trade? No, it doesn't give a crap about your $20 or your $200. You got billions of dollars trading every day. It just was a coincidence that it moved against you the minute you entered your position. Coincidence. Now if you already had stop losses in place and things like that, there are algorithms that are stop loss hunting, but they usually don't see your specific stop loss. What they do is they see this. They see this, which is where all the money is sitting. Oops, wrong one. They see this liquidity pool. They see where all of the other people's stop losses, not just you, but everyone trading, where the majority of human beings put their stop losses in the same spot or their liquidation. They see the liquidity heat maps. They see They see where all the stop losses are, because most people, when they learn how to trade, they put their stop loss right under the most lowest wick, previous wick, thinking that they're safe, because that is the trap. That's the liquidity trap, right? And a lot of times they're correct. That's where it went down to. You want to put your stop loss below these lower wicks down here. But you know, a lot of people think that they're specifically being targeted, and these algorithms or these platforms are scamming and they're taking advantage of you. No, they don't want you. Well, I know Phemex, there might be some platforms out there that make money off your trades, but Phemex doesn't. They make the same amount of money if you win or lose. They're not trying to get you to lose, because guess what happens? If you keep losing and you lose all your account balance, are you going to keep trading? No. And they're going to lose money from you. So they have small fees called maker and taker fees when you enter a position and get out of a position. And if you make, whether you make $1 million on a trade or lose $100 on a trade, they charging you the same, basically. Well, you might pay a little more on the million on the fee, depending on how long you've been on in the trade and what your leverage is and everything. But the point is that they're making their money on you trading long periods of times over a long period of time. And the only way for you to do that is to make money. So a lot of people worry about the fees a lot, but that's, to me, like tripping over the dollars to save the pennies. But
hey, Nico, can I make a statement?
yes, please.
The reason why I don't enter my trades first before putting the stop loss and the take profit is because I'm not so experienced that I know exactly how many contracts to put in right away just by looking at the charts.
Yeah.
I like to play around with I like to put my stop loss in and then play around with the number of contracts so that I know how much I'm risking for each trade. So that's why no matter how urgent it seems to get into the market, I'm always take a little bit of time to play around with the contract number to make sure I'm not risking too much and that I'm staying within my budgeted amount for each trade.
And that is the smart way to do it. Yes, I agree.
That's the key. That's what I've learned as well. Is it's all about calmness and patience. Like once you learn that, then your trades take on a whole new level. It's crazy.
But if you put your stop loss in and you play around with the numbers, you're gonna see how much you're gonna lose though, on the actual calculator itself though. So it's still, kind of smart to do it that way. Because when you play around with the numbers, you're gonna see what you lose on the actual on the platform before you enter.
The key,
exactly
the next key is to get your account to a level where you can't lose.
Yeah. And you probably never be at that level. There's always a way to lose something, but you want to get your mindset and your skill set to the point where your losses are so minimal that your wins far exceed your losses. And so even if you do have the occasional, stop loss hit, it's not catastrophic. Doesn't even do anything to you mentally. But it is part of doing business, guys. Not every day is rosy. Some days you're going to have a hit. Some days you're going to make a lot of money. And some of you are going to overtrade when you're making money. You're going to think it's your lucky day because you've had 2 or 3 winning trades in a row. And you're going to want to keep trading that day because you think you're lucky that day. And that's when you give it back. Sometimes you still need to stop trading. Don't overtrade, even when you're on a winning streak. Like the casino, if you go to the casino and you just got there, you drove 30 minutes to get there, you just got there, you put your $20 in the slot machine, pull the button, and you just win $2,000. Most people do not get up and leave the casino with their $2,000. They justify it saying, hey, this is my lucky day and I just got here. Why would I leave? I just got here. This means I'm going to win a lot more. And they spend the next 2 hours giving back that $2,000 that they just won. And the smart thing to do is the thing that is not common sense and it's not intuitive. The intuitive, you got to be counterintuitive. The intuitive thing is, I'm lucky. This is my lucky day. Oh man, if I won right off the bat, I should keep playing this machine. This machine wants to pay me. And you just give it all back. They want you to do that. They want you to get a taste of success so that you go into, and then not only that, but you go to the ATM machine. After you go through that 2,000, you go to the ATM machine, pull out another 500, and you go and give all that to them too. And then you go on your way home, you cry and say, I should have just left when I made that $2,000. Everybody does it. Everybody does the same thing. And so that's just greed. And you got to do that a few times before you learn the lesson. And Kenny Rogers wrote songs about it. You know, you got to know when to hold them, know when to fold them, know when to walk away, know when to run. So this right here, guys, is the calculator right up here in the corner. When you're setting your limit market, I'm always on market order, but you come here in this little box right there, and you can put in your size, your entry, your exit price, target price, liquidation price, all this stuff, and it will calculate for you, you know, all the numbers that you need to know. I've not used that once since I started trading, but it's there for you as a tool. Nothing wrong with it. I'm just saying I don't worry too. I enter based on my technical analysis, and then I put a stop loss in to cover my in case I'm wrong. And then I don't even sometimes take profit targets in because I'm not saying you shouldn't. I'm just saying I don't, only because I'm watching.
How do you know how many contracts to throw in just by looking at it?
Well, in the beginning, we teach you to only use a certain percentage of your account balance. So if you have $1,000 in your trading account and you slide this size bar, you see right there, it says 10% contracts. You want that to be on contracts, not the actual coin, unless you want to count coins instead of contracts. Contracts equal to $1. 10% would be 10% of your entire account balance. But that's with zero leverage. If you have 7.5x leverage, so let's just do the math. Let's say I have $1,000 in my account and I slide this to 10%. That means I'm risking $100. But if you take the 7x leverage, you take the $100 and divide it by 7.5. Now what do I have? $100 divided by 7.5 leverage. I'm really only risking $13 on that trade then. And this is where a lot of people are like, hey, I did this trade. It was successful. I thought I made 100%, but I only made $3. What happened? And then they show me what they did, and they were risking like 20% of their account balance. That was about $1,000 they were risking, but they had 50x leverage. So you take the $2,000 or the $1,000 that you're risking and divide it by 50, and you're really only risking $20. So you had a good ROI on that trade, but you only made, $3, which was 10% or whatever of your $20 that you were risking. So you just got to remember, guys, when your leverage is going to divide the amount that you're risking. So let's go down and look. Open position here. I got 4,863 contracts. I'm at 7.5x leverage. Let's do the math. 4,863 contracts divided by 7.5x leverage equals $648. That's how much my margin is, $650.
You should probably not use that percentage calculator thing either. Just use like a standard contract, 1 contract, 10 contracts, 100 contracts, 1,000 contracts.
Yes.
I think that's the confusion that we get is that, when we use that slide bar, like Chad always says, never use a slide bar because the math is just too complicated. Like it's better to toy with the contract size and see exactly how much you're risking.
It is.
And that's
if you use that slide bar,
I use the slide bar, but I look at the contracts here when I'm sliding it.
But if you change your leverage, it throws everything off. That's when it messes things up, is if you use the slider and then change your leverage.
And that's what I'm asking, Nico, is like when you're jumping into the market and you kind of know how many contracts you are and you know how much leverage you're using, I think you have naturally like a little calculator in your head that knows exactly how many contracts to put down to know how much you're risking. But for us that are newer, probably that's not the best idea to do that because I don't think we're acclimated. I'm speaking for myself, actually. I'm not acclimated right now to knowing exactly how much I'm risking at the time. So it's better to actually put in your stop loss and number of contracts and really know how much I'm risking, according to how much I have in my account.
Right. Here's another way. Yeah. And you're right. But let's look at this. Let's slide this to 30%. If I'm at 10x leverage, I slide this to 30%, right there, 30%, right? Then it's going to be 3% of my entire account balance. It's 30% divided by 10. Okay, so, but yeah, you do got to get used to that. So when I slide this, I'm not really looking at the percentage. I'm looking at this number right here, which is the amount of contracts. If I go long, and this many if I go short. But yeah, we'll have a call just on that one of these days to really make sure everybody understands it. In fact, maybe I'll do that this Friday. Right now, however, though, on XRP, we were in this nice little wedge. It was looking like a nice bull flag. We were expecting to break to the upside, and that would have brought us right up to about here, breaking this overall downward trending channel line. But instead, we broke to the downside, equal to that same amount, basically. Created a cup and handle. And this is and not only that, but when we came up to this side, we hit resistance on the same support that was holding it before it dropped. We hit resistance, and then we popped above it. And not only did we pop above this resistance, but we popped through this downward trending resistance and held as support, and then bounced on that. Then we came down and retested both of those, even wicked all the way back down to this previous little handle channel, and then climb back above. So we're climbing above right here where these two come to a point on the apex. We're literally above it right now. Is it going to hold? I'm still long, and I'm expecting, hopefully, that, I mean, we do have a high and a lower high and a lower high here. So hopefully this does not lose its strength and just drop right back down to a lower low. But what I'm expecting to happen here is, as we are in the middle of the week, is bouncing here and starting to climb back up and finally breaking this downward trend to the upside. Because we already broke above this resistance and we're holding on right now. Go look at Bitcoin one more time, because Bitcoin it is the tide that rises all boats, so to speak. It kind of had its own little cup and handle. It came right up to this previous channel support line and hit it as resistance. And look at that, wicked up again right here. Boom, and hit it again. We hit it, broke through it a little bit, came back below resistance, resistance, resistance. It's trying to get through it, right? So let's just assume that's a cup. And it needs to break out. Where's the handle? Let's just I thought this was the handle here, but let's just say this whole thing is the handle. Because this is kind of an upward trending cup. So, and instead of this cup, it would be more like all the way up to here with the handle. Kind of like tilted this way, but possible. It still looks cup and handle-ish to me. And then we have a possible breakout, but the problem with this cup and handle is that it's right up against resistance. And a lot of times cup and handles up against resistance don't break through. So it has we're up against two different resistance levels here. We have the resistance of this previous upward trending support line that's inside of this overall downward trending channel that we've been in for a while. And we have this resistance of the overall downward trending channel. And it's all coming to a head right here in this little corner, this apex. And if it breaks through it and it gets to equal to the depth of the cup, it's going to just bring us to the top of this channel that it was in. But it will have broken this resistance and this resistance, which is two major resistance it needs to get through for that to happen. And if that does happen, and it breaks through this and gets back up into this channel, then it will probably come back down and retest. and it will just be a continuation of the channel it was already in before the big dumperoo and back up into it. And this would also be considered a trend reversal, because the overall trend was this downward trending channel, and we hit the bottom. And if we break out here, then this trend is no longer, and we will have a new trend going up like this.
Hey, Nico.
Yes, sir.
At what point do you go in and like set some limit orders if you think it's going to break out high, or would you set some limit orders thinking it's going to go long, and then also set some if it's going to go short and see where it goes?
Yeah, I personally don't set conditional orders, because I'm usually paying attention, but also for another reason. Let's just say I think that as long as it gets above this line, it's going to break out to the upside. So I go down and I put a limit conditional order. Let's just say I do that, and I put it right somewhere here. And because if it gets through this line and triggers my limit conditional order, boom, I'm going to be in a long position now. But what if it hits it and then comes back down and then falls back below? So now I'm in a long up here with a very high entry, instead of being in a long down here. At the bottom, I get in a long when it triggers my conditional order. And then it goes negative, negative, negative. If it doesn't bounce here and go higher, and it just keeps falling back down, I'm going to go negative, negative, negative. So that doesn't mean there isn't a place for conditional orders or limit orders. It's just I don't use them because the market sometimes will seek those orders out and fake out and come right back down. And it seems like. So what I would do instead is I will wait for the breakout. I will wait for the retest. I will wait for it to start climbing higher than where it broke out. And then I will enter here long and put my stop loss here. So I'm just a little bit more methodical about it. I don't, nothing wrong with conditionals. You can use them, but I would say a good conditional limit order is, I do have one at, what is it?
You're waiting for another October 10th, aren't you?
I always tell the joke is that I have a limit conditional order at $2 for Bitcoin. If Bitcoin drops to $2, I'm going to buy, 21 million of them. But it's going to automatically trigger my order to buy all of them. But that's obviously just a joke. But the truth is that, if I put a limit conditional order at 70K on the bounce and it doesn't bounce, I'm in trouble. If I put a limit conditional order to go long as soon as it breaks 126K, like I could put one right here at 127. If it hits 127, I'm long. That means it's going to go to a new high. But it's also possible that it comes up, hits it, and then that's it. It's a double top and it just drops back down.
Right.
So me personally, I just don't like to have them sitting out there, because they could trigger in the middle of the night when you're not paying attention.
Yeah.
You wake up the next morning and you're really negative because it triggered it and then went back against you. That's just, there is a time and place, and you need to know what you're doing, obviously. But who in here is using limit conditional orders successfully? I'm sure there are people doing it.
I use limits. I don't use limit conditional. So limit conditional requires an extra trigger, and sometimes that trigger gets in the way. It'll hit the trigger, and then it'll put the limit on the board, but it'll have already blown through what your limit order would be. So I just use straight limits. If XRP drops to 80 cents on a Black Friday event like the last time, bill's going to get filled. You know what I mean? And the risk is there still. If I'm not using enough margin in that trade and say it goes down to 20 cents, like Nico's saying, I'm dead. It's over with. But it can go to 20 cents, right? That's a lot of wiggle room for me.
Yeah. So I'm a market order guy. I like to place my trade and enter the trade at the exact moment I want to be in it, not on some condition that if it gets to this price, it's going to put me in. If it gets to this break, because I have to see what's happening when it does get up to that price where you would normally put a conditional order in. I want to see what the overall market looks like at that time. Is this a fake out? Is this just a temporary pump to that number? Is the overall market on the higher time frame showing me something? I just kind of like to, I know it's kind of weird, but I don't buy memberships to save money. Like if I go to the gym and it's $49 a month for the gym, and they say, but if you pay for the whole year up front, you're going to save $10 per month. It'll only be $39 a month, but you're going to pay $390 or $400 right now, but you're only going to pay $39 a month instead of $49. I still won't do it because I don't know if I'm going to be around 2 months from now.
Right. You just never know.
I don't want you to have all my, the whole money that I may not ever use. I might not even come back to this gym. So I'm going to pay more just to go pay as I go. That's kind of the way I am in real life. That doesn't mean it's smart. That doesn't mean I couldn't save money if I did it the other way. It just means that that's just my personality. That's what and when it comes to trading, I don't like to risk until I'm ready to risk.
Hey, Nico, I hate to beat a dead horse, but when you do see like, an opportunity, you enter in the market right then, and you're saying like, I always enter in the market first and then I put in my stop losses later. What exactly goes through your mind when you're calculating that? Because you can't enter long or short without putting in the number of contracts. So when you put the number of contracts in, and like again, it's beating a dead horse, but what is the little quick calculation you do in your head to throw the contracts in before entering, so that you know that you're not risking too much or too little or whatever based on your account balance?
Yeah, I just always bet around the same amount, a couple thousand contracts, a couple $1,000. And
so it's just from experience,
it's usually less than 10 or 15% of my account balance. So I don't really, now that's a high amount for a new person, not just dollar wise, but percentage wise.
That's what I'm saying is because when I kind of mess around with the contracts, I'm like, it makes a big difference. Like I'm like, oh, am I going to risk $100 or am I going to miss risk $200 in this? Like, so I have to like be like, okay, I want to get in, but I got to mess around with this calculation first before I do it.
For you and for most new people, the best rule of thumb is don't worry about. Always risk 10, try to risk 5% or less of your account balance. I don't care what that is. I don't care if it's $20 or $10. It doesn't matter the dollar amount, because what you're trying to do is learn how to become a consistently profitable trader. Once you've confirmed that you are now consistently profitable, meaning you make 10 trades and 7 or 6 or 7 are winners or more, now you've just proven, you got proof of concept, you know that you understand a strategy, you know what you're doing. Now you can increase the amount you risk or deposit more money in your account. Technically speaking, I wouldn't want you to increase your risk percentage. I would rather you deposit more money. So keep your risk percentage at 5%. But if you have $100 in your account when you're practicing and learning this, and you're risking 5%, you're risking $5. So when you start to get good at this, don't go and risk 50% of your $100. Just deposit another $900 in your account. Now you got $1,000 in there, and you're still risking 5%. But now you're risking $50, which is 5 times more than you were risking before. You only deposited 9 times more money, and that you had before. And so deposit more and keep your risk low. Keep your risk the same. You get 100,000 in your account, still risking 5%. The dollar amount is much bigger, but the percentage stays the same. Now, let's just use this example. Let's say you got $10,000 in your account and you're risking 10%. That's $1,000. And then you put a 10% stop loss on that. Now you're really only risking $100. So it doesn't matter if you have $10,000 in your account, you're only risking $100 on the trade, and you're never risking more than 10% of your entire account balance. In fact, if you use a 10% risk management, in other words, you're only risking 10% of your account balance on the trade, which is your margin, the amount that you're actually risking on the trade. So you got 10 grand in your account, you're risking $1,000, that's 10%. Then you put a 10% stop loss on that, you're really only risking $100. And what is $100 to your $10,000? That's only 1%. So on any given trade, you're risking 1% of your entire account balance, if you want to look at it that way. So figure out how much you have in your account. If it's 500, 5,000, 50,000, doesn't matter. If you want to risk 1% on that trade, you put your margin at 10% and your stop loss at 10%.
Hey, Nico, can you
May
take a
I?
look at Ethereum and see what your thoughts are on that?
Ethereum, it did fall out of the big bullish flag channel that I had here, and was hoping it was going to break to the upside and go all the way up to, $6,000. It just didn't. And it broke to the downside. And when it first wicked down to the downside and came back up, I thought this was going to be the big break to the upside, because normally when we do have a nice wick down outside of the channel and it comes back up and hits the top of that channel and comes down halfway, usually, see that blue line, that's usually the halfway mark. Usually that's the beginning before the breakout. And it was, but it did below. Instead, it went to the downside instead. And then where did it come? It went down to this level, which was previous support and resistance, going all the way back to January of 2024. We had resistance, support, support, resistance, resistance, support, resistance, resistance, and then support again. So we are bouncing on this magic support and resistance line going all the way back to a year ago. And it's correlating, it's kind of going down with Bitcoin right now. It's correlating. And if we could have an altcoin season, if we do have some Bitcoin losing dominance and the altcoins take off, I am expecting it to make higher highs. I mean, we did. I mean, the problem with Ethereum right now is it's back in its overall range. Right here, it was March of 2024, June of 2024, December of 2024, and July of 2025. Over a year, couldn't get out of this sideways range. It broke out finally and retested as support, bounced, but kept making lower highs and then fell back into the range. So we're in the range still. And let's see what else. We have this upward trending support, which was resistance, and then support, support. We broke below that. And then we have another one right here. We had upward trending support, 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 and we broke below that one. So it's not looking good for a lot of these right now, guys, in the short term. So what I would say is that Ethereum needs to get back above 34.25 previous support and back into this channel, which would happen naturally. If it did that, it would kind of just be automatically back up into this channel. But ultimately it would need to get above this purple line here at 39.50, which was really about 4K, which is the one that's going all the way back. So, I mean, this could be the calm before the storm, when all of these are just bouncing on these lower levels, and then something major is going to happen. There's going to be some big announcement, or the financial network switch over and we go into blockchain, and Trump does all these things that they've been talking about for the last year. And all of a sudden there's just a huge surge of excitement in the crypto market, because if there's not, then it's just going to be stock market crashing, bear markets coming, stagflation, all kinds of things that are just going to be par for the course. And that's that. And Trump did say that it could get worse before it gets better, but there's a lot of things that he's trying to do to clean things up and to make America more prosperous and all that stuff. And, taxes and, tariffs covering the taxes. So instead of an internal revenue service, we will have an external revenue service, where the money that the IRS needs and gets to do things with is not going to come from us anymore. It's going to come from the tariff money. That's what Trump wants to happen. And he's talking just recently about eliminating the IRS for income tax, not eliminating the IRS, but eliminating income tax. Now, what would that do for the economy? What would that do for everybody? I mean, have any of you been to Dubai? Do anybody know what's going on in countries that have zero income tax? Because it's pretty prosperous. It's pretty good. People are expatriating from the US to Dubai right now, just for that sole purpose, and making a lot of money and keeping everything themselves. So it's something that would be good, but it's something that would cause chaos. Can you believe there's people advocating against this? There's people that say, well, we need to tax the rich and we need these taxes to pay to people. Do you believe that there's people out there? I mean, I don't know if any of you are one of them, but income tax is legal thievery. It should be illegal. It is not something that is good for us.
People believe in
say,
it,
well,
man.
don't they need the money to pay to pave the roads? No, it doesn't come from income tax.
They don't know it. They don't believe it. They don't believe it. They believe in scarcity, man. They believe in scarcity. And that's like, there's a professor that does a YouTube video where he's asking his students all the different questions. They just can't get it. They cannot understand it.
No. When you guys saw what Doge was uncovering, where the billions of dollars was flowing to, it should have made you sick. I mean, they're spending money on programs in Afghanistan to determine, transsexual puppies. I mean, dumbest shit in the world. Millions of dollars of our tax dollars going to the dumbest things in the world. And why? You might think, well, why would the Democrats and why would the government want to fund those things? They don't. It's called kickbacks. These organizations apply for money and they get these huge donations with the condition that they have to kick back a certain amount to the politician that made the law happen and to the organizations that make it happen. And that is extremely why, and the only reason why politicians that make $200,000 a year in Congress and in the Senate are multi-millionaires. How do you get a job working for Congress for $200,000 a year, like Nancy Pelosi, and have a net worth of 77 million or 200 million? It's absurd, guys. Barack Obama, when he exited office, is worth 50 million, and now he's worth 500 million. How does that happen? Nancy Pelosi's an expert stock trader. That's why she's so rich. No, it's because she's passing laws and she's getting solicited by the founders and the CEOs of all these major companies who are basically telling her what they're about to do. It's insider information to the extreme. And then our tax dollars, guys, are going to things that you would not support if you had a choice. And then you got organizations like NASA who gets like $60 million a day funding them. And what do? They put CGI videos up showing them walking in space that may not even be real. They're in a underwater tank in Texas, in their underwater facility, and then they take that video and then they make it look like there's space behind them, like they're up in space. And most of the shit's been proven to be CGI and bullshit. But they can do it because it's Hollywood. It's Hollywood expenses. I mean, they got the budget to fake us out. Now, I'm not saying that space is fake or that they've never been to the moon. I don't know, but I don't think they did personally. And I think it's all been bullshit. I think it's all been one big lie. But you can certainly fake a lot of people out with $60 million a day budget. And why are we funding this stuff? We got private or space organizations now that are private that are doing more than NASA's doing. So I get upset with this stuff. I know it has nothing to do with what we're doing here with trading, but we talk about this stuff because the more you know, guys. The IRS is a scam organization to keep people poor. I mean, you're working your ass off for your money, and you have to pay this unknown, invisible organization 30-40% of your income. And what they do with the money, guys, the government prints money out of thin air. Why do you have to pay them 30% or 40% of the money you work hard for if they can just print money out of thin air? And when they print money out of thin air, they send pallets of it over to our enemies in other countries. Because when they send Volinsky, $2 billion in cash on a pallet in the middle of the night, as long as he kicks back $1 billion of it, he gets to keep the other $1 billion. And what are they funding? They're funding the war. They're supporting them against attacks from Russia. Meanwhile, Zelensky's over there buying yachts and mansions. If you guys really know what's happening with the money, it's sickening what's actually happening. It's a big club that these people are in, and we're not part of it. And they're all just playing us like a fool. So can you get rich in America? Yes, you can get rich. And you can legally reduce your tax liability. You can do all that stuff. The majority of the people don't. The people who get taxed the most are the regular W-2 wage earners, the poorest people, the people who are working their asses off and trading their time for money. They are in the highest tax bracket. And they're all protesting, tax the rich, tax the rich. The rich aren't, you're not going to tax the rich because the rich don't make any money. What? The rich don't make any money? Yeah, the rich, Jeff Bezos is notorious for having a $100,000 a year salary. $100,000 a year. That's what you're taxing when you tax the rich. You're taxing his salary. That's his income. But he's a billionaire. Yes, but he's only a billionaire because of his stock options. And he don't pay taxes on that unless he sells it. And guess what he does? He doesn't sell it. He borrows against it. And you don't pay tax on loan proceeds. So you can't tax them. And if you could figure out a way to tax them, guess what they would do? They would leave and go to a tax-friendly nation. They're leaving New York in droves, coming to Florida because there's no state income tax in Florida. So anyway, long story short, guys, don't be pro-tax. If you really understood, I don't think any of you are in this group, hopefully not. But if you are, you need to understand what's really happening. And first of all, I'm for a flat tax. I think that roads should be paved and the government does have to do some stuff. And somebody has to fund that, right? So where does that money come from? It comes from usage tax. You want to buy a Rolls Royce? Okay, you got a luxury tax. You want to fly a jet? Okay, you got jet fuel tax. You want to put gas in your car? You got gas tax. That tax goes to fix the roads, by the way. It's the gas tax. That's where all the road work and all the, the infrastructure money comes from. Gas tax, not from income tax. The income tax is just paying back debt to who? Who do we owe money to? I don't know. It's ridiculous, guys, when you really go down the rabbit hole. But anyway, long story short is try not to pay tax. Do it legal though. Do it legal though. Now, we do have our government, and we do have the president of the United States for the first time in the history, and it's not the first time that the IRS has been abolished. Kennedy tried to do it too. Those of you who are old enough remember, but he was assassinated shortly after he made the comment about it. And Trump they've attempted to get rid of him a couple of times already too. But just this week, Trump said, I'm going to try to find the post to show you. Just this week, and I know a lot of you are paying attention to this stuff too, but oh, here it is. Nope, nobody else is trying to do this because the money, he's collecting so much money from tariffs that they can fund the IRS and all the government expenses without taking it from the American people. And there's actually people out there protesting this. The left-wing liberal idiots. I'm sorry if you're a left-wing liberal, but that's just the most asinine thing I've ever heard. Go ahead. Someone will say something.
I just said they should be shot.
It's just anti-American. The taxes are American. No, it's anti-American.
What Trump is trying to do is what Cleveland did, and Bill, correct me if I'm wrong. It was in 1913 when all of this changed. We're nothing more than slaves. It's still to the British Empire. Still to the British Empire.
That's why they're so against
us.
But who owns
still
them?
own us. And Trump is trying to free us from Great Britain.
I mean, maybe he answers to Israel. That's a problem, but that's bigger than this call, I think.
Yeah, there's a lot we won't talk about on this. We do have a conspiracy call for that, and Bill does a great job on that, guys. If you're interested in all that stuff, it's not indicative of everyone's beliefs in this group because we really don't know the grand scheme of things, but there's a lot going on that most people don't know and will never know. But there are powers that be, obviously, that control the world, and there are puppet masters, and there are puppets, and usually the leaders of the countries are the puppets. You would think that they're the ones making the decisions, but they're not. They're the ones being controlled by a higher power. That's why a president-elect will run for office and promise you the world, and as soon as they get into office, they can't deliver anything they promise, and you're calling them a liar. But they're not really a liar. They actually had intentions of doing those things, but then they hit a brick wall and realize, oh shit, I can't do that. And here's why, because these people will kill me and my family if I do that. These people have already threatened me not to do that. That's what happens behind the scenes. Then they get in line and be good little boys because they don't have the financing or the funding, and they need that government job. They need that president, that 400,000 a year, and they need that power. And then they're also promised, hey, just play by the rules, do what we show you, and you will, be able to retire and you will be looked at as a hero. And so they just
there's a saying that says the president is selected, not elected.
That's right. They're selected, not elected. Exactly. And so, and there's some other truths out there, guys, that you can go down the rabbit hole and gets a little ridiculous, but almost every single president that has ever existed so far is bloodline related, going all the way back to like Louis the 15th. Is
all but one.
Absurd. What? Say again?
Yeah, all but one.
All
Direct
but one.
tie to the king.
That's
who?
All.
That's a problem.
Donald
I think
Trump.
it's Trump. If I'm not mistaken.
Yeah, it's Trump. Even Obama is related to Bill Clinton and and George Bush and all these people. And most people are like, how is that possible? No, it's possible. Just do your research. And I'm not against any of these people, guys. It's just, it is what it is. It's just the world we live in, and we're just not part of the infrastructure or the back office. We don't get to see what's behind the scenes. We're kind of the crew, the fill-in crew, or whatever it's called. We're the stand-ins. We're the cast. You gotta just become the director, the producer, and the star of your own production, and stop being a stand-in in somebody else's play or somebody else's movie. And that's what most people do. They go through life just totally just ping-ponging around, bouncing off other people's ideas and rules, and they never really just take control of their own finances, their own economy, and their own decisions. And the people that do are the ones that are celebrated. The people who do that become the rich people, or the millionaires and the billionaires. They're the ones that kind of go against the grain. And when they get too big and they say the wrong things, they get shut up. Doesn't matter how big they are, right? I mean, look what happened to Charlie Kirk and some of these other people, guys. It's sickening. I'm not going to talk about that right now, but I have my own thoughts on it. But it's just kind of crazy. Look what Candace Owens and what she's talking about. She's having death threats now because she's trying to expose these people. And if you're following any of those people, guys, it is a crazy world we live in right now. So anyway, with all that being said, what can you do? I'm not here to depress you and make you feel hopeless, because there's a lot of hope out there. It all just depends on what side of the bus window you're looking out of. If you're looking out of the part that's all doom and gloom up against the dark caves, or you're looking out on the other side where it's nice and sunny, you just turn off the TV and you'll reduce your stress right there. You'll probably increase your lifespan right there just by turning off the television, the regular mainstream news. Stop following all that nonsense, because whatever's happening you can't control anyway. And then whatever in your mind is the only thing you control, and you control what goes into your mind. But then if you just focus on improving yourself, your health. I know we talk about money and trading a lot, but guys, you gotta take care of yourself as well, because no rich person that I've ever seen that accumulated a lot of wealth but ended up being sick and diseased and maybe even terminal illness, there would be not one of them that wouldn't give all of their wealth back to get healthy again. Not one. If they could, they would just buy it all back if they could. But so what I'm suggesting is that in addition to getting rich, you also take care of yourself, get healthy, make that a priority as well, because there's no use of having a lot of money if you don't live to enjoy it, or at least if you're already older and you already kind of you're doing what you can, but then you're doing this for somebody else. You're doing this for your family. You're doing this to leave a legacy. That's another story. That's good as well. Do both. But feel good. Take care of yourself, take care of your family, and make as much money as possible. It's all you guys can really do. And the one thing that is fortunate about this group and what we're doing here, guys, is that this is the only thing you can do that literally front runs the institutions and the governments. In other words, you're in on it, and you can be in on it, and you can accumulate enough crypto in certain niches like XRP, for instance, that is ahead of what the government's about to do. And kind of like, you'll just be lucky enough to be in it before the big switcheroo happens. And it can happen, guys, in a lightning, in an instant where all of a sudden the price of XRP is readjusted to $100. Let's just say, hypothetically. And why would that happen? A lot of people are like, well, how is XRP going to ever make it to $1,000 or $10,000 because the market cap is this and blah, blah, blah. Doesn't matter. Once I say a switch being flipped, but it's actually certain financial institutions confirming that they are going with that protocol, it's over. It's an instant thing. It will happen overnight. And it could just jump to $100 within a day or two. And if you have 10,000 of them, you're rich, just like that. All you had to do was just be ahead of everyone else. Just own something that's very cheap right now. Now, 10,000 XRP right now at $2 is $20,000, and not everybody can do that, but you can all probably accumulate 1,000 or 2,000 at the very minimum. Just in case, if XRP goes to $1,000 and you got 1,000 of them, that's $1 million. And you only cost you $2,000 for that. And why would this happen, guys? And first of all, it has happened already many times. Look at Bitcoin. Just a measly 8 years ago, you could have $1,000 worth of Bitcoin and you'd be a multimillionaire right now. So, and there's people out there that spent $1,000 13 years ago on Bitcoin, $1,000, who are now billionaires, not millionaires, but a billionaire from $1,000 investment. And so that's only possible in crypto. That has not happened in any other thing in our lifetime.
Hey, Nico, what do you think is a better investment? 10,000 to XRP, which I don't have any of right now, or possibly buying those nodes?
Oh, that's easy for me, but guys, someone asked me that already. They said they wanted to buy 10,000 nodes, but they want to sell some XRP to do it. I'm like, do not sell your XRP to buy nodes, guys, because listen, do both if you can, but if you only have a choice to do one or the other, go with XRP. Okay.
Thank you.
Yes. I like the idea of the nodes, and the nodes it's like printing money, and it could turn out to be huge over time, but I think XRP is almost a certainty that it will. So you're taking a risk with the nodes. And I've made that very clear on all the calls, right? But the nodes, you know, once they start minting you tokens that, like, if you did the buy one, get one free, the 10 nodes, you know, you got 20 nodes spitting out 100 tokens a day. That's 2,000 tokens a day. That's 800,000 a year. At the end of 1 year, if it gets to $1 or $5, you made a couple $1 million. You know, so there is a huge potential there. But what if it doesn't get to the $5 or the $1? What if it's only 0.08 cents in a year? Well, you still doubled your money, which is good, but it's not like 100x or 1,000x like you could with possibly XRP. So do both if you can.
When does that buy one get one expires?
It was 7 to 10 days from the time of our call on last Wednesday, a week ago. And I did ask him that yesterday, and he said, well, you know, how much time do they need? He asked, how much time do they need? So you got to let me know if that's something you're trying to do, but you need a few days or whatever, send me a DM, let me know, and I'll let them know, and they'll try to hold that. They'll try to make it work for you. But technically speaking, guys, the buy one, get one free offer was over before we had our call. They actually offered that before we had our call with Billy, and they extended it just for us. But